Today our topic is lease. Lease from the in lease there is a two party. First lessor, the second is lessee. When you say the lessor is the owner. Lessee is the user of property, assets, or anything. So we are going to learn the accounting methods in the book of lessee. So for lessee, the lease type may be an operating lease or finance lease. So in the lessee, either it is going to be operating lease or finance lease. In both the cases, the recognition will be based of ROU asset and there will be a lease liability. ROI means right of use asset. Okay. It is like a single line. The accounting impact is like single lease expense. The accounting way will be single lease expense. Now, in the finance lease, the ROU asset plus liability, but there will be a separate amortization plus interest expenses. So the accounting will be done in that way. Now, moving to the lesser we will discuss in the second page. Now, the lessee books for the operating lease. So, here is the case. The lease term is 3 years and the lease payment is 10,000 per year. Now, the discount rate is 5%. So, how we will calculate? This is the 10,000 every year multiplied by 3, 30,000. But we need to calculate the present value of lease value. So how we are going to calculate? We need to do 10,000 divided by 1.051 plus 10,000 divided by 1.05 power 2 plus 10,000 divided by 1.05 power 3. If you do all the present value calculation and add it together, this will become 25,770. So this is the value of ROU plus lease liability. So ROU and the lease liability is the similar value. Why we need to calculate? Actually, what is happening sometime we don't record the off balance sheet. We create some obligation, but we don't take it into the balance sheet. So to curb that problem, the IFRS or ASC accounting standard code came with the solution that okay, whatever be the type of lease, you need to bring it to the balance sheet so that user of financial statement can easily understand. So in the current cases, the ROU as well as the lease liability both will be 25,770. So now coming to this. So this is like a lease liability plus ROU asset and lease liability. This is of the same value. Now the entry will be you need to record first entry you need to record or incorporate. So the entry will be year 0 means at the beginning of the so you need to do the debit ROU asset and credit lease liability and this is both is coming of same value. Now this is clear. Now so you recorded the lease asset plus lease liability. So you asset ROU and then liability of 25,770. Then at the end of year 1, you need to start recording the expense. So lease expense debit to cash. So it means that you paid the leave, you paid the annual rental of the equipments and then your cash as outflow. So you do lease expenses to cash. Now, coming to the second. So these are the entry. This is the case of the operating lease. Now in there is another thing. We have to do the Mm, but before moving forward, we will just try to understand the lessor's book. So in the lessors, until now, I have discussed the operating lease in the book of lessee, and now moving to the book of lessor. So in the lessor also, there is a lease type, maybe an operating, maybe a sales type, or financing. So these two comes under the financial lease. So the accounting, the operating, keep asset and recognize the rent over time. So it means that we are not removing the asset from our balance sheet, and we need to start recording the revenue as a rental income from the lease contracts. Now we need to provide the depreciation on the assets and the same time rental income. Once the we start receiving the money, we need to record the rental income. So for the current examples, we will make the entry in the book of lesser. So lesser, what is happened here, the asset cost was 30,000. Okay, now, and the useful life is 10 years. So it means every year the depreciation is how much? 30,000 divided by 10. So it is 3,000 per year depreciation. Now